Monkey have a problem. Not a small problem. Not a drop my banana on the ground problem. A big, complicated, invisible problem that Monkey did not even know was a problem until it was too late. Monkey needed a place to live. The jungle was expensive. Every good tree was taken. So Monkey went to Monkey Bank and asked for help. Monkey Bank smile. Monkey Bank always smile. We give you leaves, said Monkey Bank. 500,000 leaves. You buy your tree. You pay us back slowly every month for 30 years. Monkey signed the paper. Monkey move into tree. Monkey feel good. Everything seems simple. Everything seemed fine. But here's what Monkey did not know. The moment Monkey signed that paper, something strange happened. Something Monkey could not see. Something that would travel all the way across the jungle to a monkey in a top hat who Monkey had never met and would never meet. Monkey debt had just become someone else's investment banana. This is the story of securitization. That is a big word. Here is what it means. Securitization is when a bank takes a bunch of loan promises and bundles them together and sells that bundle to someone else. The bank get paid now. The investor get paid later. The borrower, Monkey, keep making payments without knowing anything changed. Monkey Bank did not hold on to Monkey's debt. That is not how Monkey Bank work. Monkey Bank is not in the business of waiting 30 years to get leaves back slowly. Monkey Bank is in the business of moving fast. So Monkey Bank look around the jungle. Monkey Bank see that 1,000 other monkeys also borrowed leaves to buy trees this month. 1,000 signed papers, 1,000 monthly promises, 1,000 steady streams of leaves flowing in every month. For the next 30 years, Monkey Bank think 1,000 leaf promises all together is very powerful. Not one banana, not 10 bananas, a whole tree of bananas, maybe 2 trees. So Monkey Bank bundle all 1,000 promises together and call it a leaf promise bundle. This is what the real world calls a mortgage-backed security, an asset-backed security. It is a financial product that represents a claim on future cash flow. In this case, future leaf payments. From 1,000 ordinary monkeys just trying to live in their trees, Monkey Bank take the leaf promise bundle to the secondary market. The secondary market is like a big jungle trading post, where financial things get bought and sold after they were first created. Monkey Bank sell the bundle there to rich investor monkeys who have lots of leaves sitting around doing nothing. Investor monkey in the top hat look at the bundle. Investor monkey say, "How safe is this?" Good question. Monkey Bank had thought of that. Before selling, Monkey Bank take the bundle to the monkey rating agency. The monkey rating agency is very important. They are supposed to look at the bundle carefully and tell everyone how risky it is. If the bundle is safe, they stamp it AAA, very trustworthy bananas. If it is dangerous, they stamp it something worse. The stamp matter a lot because investor monkey in the top hat will only buy things that are stamped AAA. Investor monkey is not reckless. Investor monkey manage other monkeys' retirement leaves. Investor monkey must be careful. Monkey rating agency look at the bundle. Monkey rating agency stamp it AAA. The bundle gets sold. Investor monkey is happy. Monkey Bank is happy. Monkey government is happy because leaves are moving through the economy. Trees are being bought and the jungle feel prosperous. Only one monkey is not thinking about any of this. That is regular monkey. Regular monkey is just eating breakfast and wondering why bananas cost more this season. Now here is where it gets interesting and slightly terrifying. Monkey Bank did something clever before selling the leaf promise bundle. Something called tranching. Tranching means slicing the bundle into layers, like slicing banana bread. The top slice is the safest. It get paid first if monkeys stop paying their loans. The bottom slice is the riskiest. It get paid last. If many monkeys default, meaning stop paying, the bottom slice lose everything first. The top slice get a lower yield because it is safer. Yield is how much return an investor earn relative to what they paid. Safe things pay less, risky things pay more. This is the eternal rule of the jungle. Rich conservative investor monkeys buy the top slice. Slightly less conservative investor monkeys buy the middle. Brave and greedy investor monkeys buy the bottom slice because the yield is delicious. Everyone think they understand the risk they took. But then someone had another idea. What if you take all the risky bottom slices from many different leaf promise bundles and bundle those together into a new bundle? A bundle of bundles, a super bundle. In the real world, this is called a collateralized debt obligation, a CDO. It sounds complicated because it is, but the idea is simple. Take the risky parts, mix them together, claim the mixing made them safer. Because they are diversified across many different groups of monkeys in different parts of the jungle, Investor Monkey look at this new super bundle and ask the monkey rating agency to rate it. Monkey rating agency look at the super bundle. Monkey rating agency stamp it AAA. Now the super bundle is stamped very trustworthy bananas, except inside the super bundle is nothing but bottom slices. The riskiest pieces of the riskiest loans made to the most financially stretched monkeys in the whole jungle. Small monkey journalist at Monkey News sniffed the bundle. Does this smell right to you? Ask monkey journalist. It is AAA, say monkey rating agency. We stamped it ourselves. Monkey journalist write a small story. Nobody read it. The bundle sell anyway. At this point, the whole system is very far from where it started. Regular monkey is sitting in a tree making monthly leaf payments. Those payments travel to Monkey Bank. Monkey Bank passed the rights to those payments to the Leaf Promise bundle. The bundle was sliced up, and the risky bottom slice was bundled again into the super bundle. The super bundle was sold to Investor Monkey, who used retirement leaves from thousands of ordinary jungle monkeys to buy it. Regular monkey making leaf payments is now connected to the retirement savings of 1,000 monkeys monkey never met. Monkey does not know this. The chain is invisible. This is what economists call systemic risk. When one part of the chain snap, every part feel it. And there is one more instrument in this story, one more layer. Some clever monkey in a suit figured out a way to bet on whether the Leaf Promise bundles would fail without owning the bundles. This is called a credit default swap. It is basically insurance on someone else's debt. You pay a small premium every month. If the bundle collapses, you get paid a huge amount of leaves. Some monkeys bought credit default swaps on bundles they never owned, like buying fire insurance on someone else's tree and then hoping for lightning. Monkey in a suit say, this is just risk management. Monkey economists say nothing for a while, then say, sure. By this point, Monkey Bank had converted Monkey's loan promise into several different financial products, collected fees at every step, distributed the risk across the entire jungle, and moved on to the next batch of borrowing monkeys. This is debt monetization in its most extreme form. Debt monetization simply means turning a debt obligation into something that generates returns and can be traded. At its most basic level, it is useful. It allows banks to free up leaves and make more loans. It allows investors to earn yield on their savings. It spread risk across the system rather than concentrating it in one place. But here's the thing monkey eventually understand. When debt is sliced and repackaged and sold and re-rated and resold, the original connection between lender and borrower disappear. Monkey Bank no longer care if Monkey can actually repay. Monkey Bank already sold the loan. Monkey Bank already collected the fee. The risk belonged to someone else now. And when the person holding the risk does not know the real quality of what they bought, and the rating stamp said AAA. When the bundle was full of rotten bananas, the whole jungle find out together, all at once. Monkey sit in the tree one evening watching Monkey News. Monkey see that many monkeys across the jungle stopped paying their loans. Monkey see that the Leaf Promise bundles lost their value. Monkey see that the super bundles, the CDOs, collapsed completely. Monkey see that big investment firms and retirement funds that held these products are in serious trouble. Monkey look at own monthly payment receipt. Wait, say monkey, my loan is in one of those bundles? Monkey Bank, somewhere across the jungle, is not answering messages. This is the moment. This is when Monkey understands something that most monkeys never stop to think about. A loan is not just a loan. The moment Monkey signed that paper, the debt became a product, an asset, an investment banana for someone else. And while Monkey was just trying to live in a tree, a whole invisible financial machine was built on top of Monkey's simple promise. This is not inherently evil. Securitization fund housing markets. It lower borrowing costs. It connect global savings to local loans in ways that make economies grow. But it only works if the bananas inside the bundle are real bananas. If the rating is honest. If the risk is understood by everyone who hold it. When those things fail, the machine eats itself. Monkey sit in the tree for a long time thinking about this. Then Monkey look at the next leaf payment coming due and decide that paying on time, understanding what was signed, and asking questions before borrowing is the most powerful thing a regular monkey can do. The world of finance is not happening somewhere else. It is happening inside every loan document Monkey ever signed. The debt belonged to Monkey. The risk belonged to everyone. The yield belonged to whoever bought the bundle. Now Monkey no. And as always, apes together strong.